Is real estate a good investment? We are going to talk about the pros and cons of real estate investing today and compare it to other investments out there. I know you're going to love this video, so make sure to comment and like this video down below. Before we get into real estate, let's first examine some other investments. The stock market. Since the 1950s, the average return in the stock market is right around 7%. Not bad. Now you might be saying, but Kyle, last year I got 15% on the stock market. Hey, that's all good and well. I'm just talking about the nationwide averages over the last 70 years. I believe in stocks, I'm invested in stocks, but I also know that I don't know much about stocks. They're super unpredictable. I've tried learning. It's just not that easy to learn. So with that being said, if you're in it for the long haul, you want some steady growth, I believe in stocks. But if you want to retire early and dominate the stock market, hey, best of luck to you. Another common investment, a business. So your friend has this amazing idea. It's going to be the next Apple. Or is it going to be the next MySpace? Or does it amount to absolutely nothing? The risk in investing in a business is super high, but I'm no expert, so I'm not going to give you advice on this one. All I know is that it's not anything I'm looking to invest in anytime soon. Now for the reason you clicked on this video, real estate investing. It is by far, hands down, the best investment out there, and here's why. Now, before we get started, I just want to let you know this is just one type of real estate investment strategy. There's tons of them out there. We're going to talk about the most popular one for investing, which is rentals. First, how would you like a 25% return or more on your investment? That's a lot better than that 7% from the stock market, right? Let me show you how this is possible. Let's take a real basic house. How about $150,000 is the asking price? You have to put down as an investment property 20%. Do the math there, that's $30,000 down. Using a mortgage calculator, you find out that your mortgage every month is going to be about $850. Well, add in your property taxes and your insurance, which I'm just using a nationwide average here, you're probably gonna have another $150 in expenses. So that's $1,000 a month. But you rent it out for $1,200 a month, so your positive cash flow every single month is $200 in your pocket, passive income. Now we're gonna do some more math to figure out what your return on investment is. Your ROI is determined by your annual income on that investment property. So $200 times 12 months is $2,400. Divide that by the $30,000 and you've got an 8% return on your money right there in year number one. The second way that you're earning money on this is the debt equity. The mortgage is being paid by the tenant. So let's say that's another $200. That's $2,400 for the year. That's another 8%. Guys, we're up to 16% return on our investment just here in year one. Not to mention that this thing is going to appreciate, okay? So now the average appreciation nationwide between 5 to 6% every year, and you're up to 21, 22%. Add on the fact that you're probably in a couple years going to raise the rents. Guys, this is where we're getting that 25% return on your investment on an annual basis. Pretty amazing. And lastly, you get crazy good tax advantages from investing in real estate. So that 9-to-5 job where you're getting a W-2 or a 1099 or whatever have you, whatever that income is, because of that piece of real estate, you're able to write off so much more. And that's one thing I know for sure that stocks and investing in a business will not do. All right, so let's do the numbers. Let's assume that after 5 years, you are selling this puppy. You've cash flowed for 5 years, $2,400 per year. That means you've cash flowed $12,000 in just about 5 years. Add another $12,000 for the debt equity, and let's just assume this thing doesn't appreciate the full 5 or 6%. We round down, $40,000. You've just made $64,000, and that was from your initial investment of $30,000. Do the math there. That's a 213% return on your investment. Now, how would you like to get these same returns, but with no money in the deal? $64,000 of profit, zero money in the deal. Dumb question, right? All right, click on the cards button right here. You'll see what I'm talking about. And I think the number one thing that you've got to remember here is we're not invested in some thing in the air. We're not invested in a piece of paper. We're invested in a real piece of real estate, and it's not going to disappear. And what you may not see until you get started is how this is helping people. You're putting people in business, you're putting people to work, and you're giving families a place to live. Now, it wouldn't be fair if I was completely biased in this entire video, so let's talk about some of the cons. It's not 100% passive because you do have to deal with tenants, especially in the beginning because you likely won't have a property manager since it will cut into your profits. Eventually though, you want to set it up to where you do have a property manager managing all or most of your properties. If something goes wrong, maybe a leak or an electrical thing, you are in charge of paying for those repairs. And lastly, if the market crashes, which it likely will happen again, there goes appreciation. But guess what? You still have the tenant paying down the debt and you're still cash flowing. Do you see the power of real estate investing now? If you do, make sure you like this video and subscribe to our channel. And if you like this video, you are going to love my ultimate guide to real estate investing. It's free and it's right down below in the description of this video. And remember, the best way to get started in real estate is just get started. If you do, you stay committed, you too will be conquering real estate investing.